This is Pre-Market Prep. I'm Brianna Valesky here with Joel Elkanah, and we have Georges Ugeux. He's the founder of Galileo Global Advisors, a Belgian and U.S. national. Georges founded in 2003 Galileo Global Advisors to offer CEOs, boards, and governments independent advice on their international business, acquisitions, and capital raising. Prior to founding Galileo, Georges joined the New York Stock Exchange in 1996 as the Group Vice President of International. He also has a book called International Finance Regulation, The Quest for Financial Stability, that was published in 2014. Georges, thank you so much for joining us today. We really appreciate it.
Thank you very much.
So, obviously, we have to talk about Greece. Today is their deadline for a debt payment to the International Monetary Fund, and they've already indicated that they will not be making that payment. But you made a very intriguing point to us, and you mentioned a parallel between Greece and Puerto Rico, who's also saying that it cannot pay back its debt. Would you mind elaborating on that for us?
Well, it is very interesting that you hear that the President Obama said that's not the problem of the United States. That's exactly what Angela Merkel said in 2009 when the Greek crisis started. The reality is when you have the same central bank and the same currency, which is the case of Puerto Rico, you are in what is called a monetary union, which is exactly the same as the Eurozone. So Puerto Rico is, in that sense, part of the United States. Interestingly enough, in the last few months, the FDIC has taken over several Puerto Rican banks who were basically bankrupt, which shows that in that case, the banks from Puerto Rico are also under the coverage of the federal system of bailout and restructuring and so on. So that's where the comparison stops. 76 billion of debt against 14 trillion is probably not significant in any shape or form. Greece, in the same way, is only 1 or 3%, depending on the ratio that you take. So we are talking about two situations where the politics are more important than the actual economic impact.
That's a great point you make. I mean, I didn't even realize that Angela Merkel had said this exact same thing about Greece 6 years ago, saying it wasn't a problem of the European Union. What are your expectations for the outcome of Greece? We had a similar situation with Cyprus, not too long ago, and they stayed in the Union. And I mean, some argue that it was a bad decision for them to stay, and they've still got high unemployment, and their economy isn't doing well. And other people argue that it was the right decision for Cyprus to stay, and they wouldn't have made it on their own. Is there anything we can learn from that situation? And also, what's your outlook for Greece right now?
Let's talk about what the situation is. Okay,
sure.
We have about 360 billion of debt, 120 billion of debt from the loans from the central bank to the Greek banks. So most of it is the public sector. So that means that basically about 300 to 400 billion is owned by the public sector. Mm-hmm. So that's very different from the negotiation we had 3 years ago, where there has been a haircut of 50% of the private debt. We're not talking about the IMF, the European Central Bank, and the member government. Germany is in for 59 billion, France is in for 48 billion. So it's a totally different ballgame. And Mr. Tsipras lied to his electorate by saying he will obtain from Europe the concessions that he is looking for while they will stay in the euro. What is going to happen this Sunday in the referendum has been very clearly spelled out by Angela Merkel yesterday. She told the Greeks voting this Sunday is yes for euro or no for the euro. Everything else is irrelevant. So Mr. Tsipras being on the camp of the no, and the initial polls showing 52% in favor of the yes and 29% in favor of the no, it is very likely that the government of Mr. Tsipras will crumble sometime next week, and that we will start having what I would call reasonable negotiators at the table of the European Union.
So I'm sorry, so you're suggesting that the Tsipras and his government might crumble next week, and that someone else from Greece would come
Yeah.
in and take over negotiations. That's a very interesting point. I haven't heard anyone bring that up. That if Tsipras steps aside, and his radical government is no longer in power, who do you think would step in and be able to step up to the table
Well,
and negotiate
I
for
see a
Greece?
national coalition.
Okay.
I think what is going to happen, because one thing that nobody seems to realize, in the middle of last year, Greece went to the market, and the minimum yield that they had, the lowest yield that they had for their 10-year debt was 5.4%. Okay? Mr. Tsipras has brought it to 15%. Mr. Tsipras is effectively destroying Greece by his ideology. Because now the stock market is down, the real estate market is down, and now with this control of capital, there is no cash available. There is a sort of euro in cash inside Greece that is blocked at the border from an entrance and an exit point of view. The Greeks are no fools. They know that. They know that Tsipras, for all his rhetorics, has let the country go worse than it was before even the crisis started. So in those circumstances, I would expect the Greeks to vote for the yes. And if that is the case, the position of the government is untenable. It's important also to know that there is a second partner in that coalition that everybody forgets. There is the Syriza, which is the leftist guy,
Right.
but there is an extreme right party that is part of that coalition. But the extreme right party is under considerable pressure from all the people who supported them, namely corporations, nationalists, and so on, to accept the referendum and vote yes. So that would be the splitting of the coalition. So we will see what happens on Sunday, but the most likely outcome is that we are going to have a new government, or a new coalition at least, that will become more reasonable.
Wow, that's a great point, and one that I haven't heard yet. So I'm really intrigued. I'm really anxious to see what'll happen this weekend. I would love to shift focus more toward Puerto Rico now, if that's okay. I feel like everyone's just talked about Greece so much, and Puerto Rico is kind of a new situation. I know
Mm-hmm.
Puerto Rico, unlike like we live in Detroit, and Detroit just went through Chapter 9 bankruptcy, but Puerto Rico can't do that. Like, it doesn't have the ability to go through Chapter 9 bankruptcy. What are the options right now?
Well, there is no option for any U.S. um state to be able to go through a bankruptcy process. When people talk about the Chapter 9, we are going to do something like what we did in Detroit. In other words, if the governor, if and when, because I think it's more when, the federal government will step in, it will step in with a lot of conditions.
Mm-hmm.
Because of this 76 billion of debt, some of it is owned by banks and so on, and they will have to take a haircut. There is social security there is all kind of things we saw in Detroit. In that sense, it will be Chapter 9-like. It will just be what is happening in Greece, what is happening in all the countries that the IMF is bailing out. So it's going to be the process that we all know, and I think it is important that it happens for the following reason. And I'm probably the last person to be able to say that, but I'm going to say it anyway.
Okay.
Puerto Rico has been mismanaged from a financial standpoint for at least 25 years.
Mm-hmm.
We're now at the end of the rope, and it's about time that the Puerto Ricans, the local ones, and even those who are here, put pressure so that a minimum discipline exists in the management of that country. It's a beautiful country, it has great tourism, but it's completely rotten at the moment.
Mm-hmm.
I have a question for you here. With every good crisis, there's some investment opportunity, right? Whether it's buying
Yes.
sectors or selling sectors. We did with the Ebola. Those stocks turned out to be gray shorts. Is there, if you're trying to interpret this from an investment standpoint, are there any sectors, or where do you think the hidden gems are in the market when all this is all said and done?
Well, if my scenario is correct, now is the time to go to Europe. But I would like to talk about the insurance sector. I have been spending a lot of time in finance, and particularly in banking, but I'm increasingly intrigued by what is happening in the sector of the insurance. And I would make a split between the U.S. and Europe in that matter. At this particular stage, the price earning of insurance companies is very low. However, they had a good ride, and they produce 2% yield. But there is one thing that I would like to say. When interest rates go up, insurance companies are going to be much less exposed than the banks. And what they have is the new premiums and a lot of short-term assets that will then start yielding much more. Because we all know that insurance companies make as much money, if not more, from managing smartly their portfolio of reserves than they do out of the premium where there is a lot of cutthroat price competition. So they are extremely well positioned to take advantage of an increase in interest rates that will increase the yield of their portfolio and therefore their profits and their solvency ratio. In Europe, I'm focusing on two companies at the moment, AXA and Allianz. And if you look at AXA and Allianz, you are going to figure out that they are producing Allianz 4.83% and AXA 4.14% yield on top of being trading at about 10% each. So I think it's an undervalued sector. People don't realize how much you will benefit from it. And I would like to add one company that very few people pay attention to because you don't have a tendency to look as much as I do to north of the border. But north of the border is a company called Manulife, which is giving 3% in Canadian dollars. And the Canadian dollar is going to go up as the price of oil is going to go up. And it's also a remarkable play because you know that Manulife owns several companies, including John Hancock in the United States. So it's a global play from Canada. And my impression is that it might be the right time for investors to really understand better the risk and the business model of insurance.
What about for U.S. companies? Is there any U.S. companies that you think would be?
Hello? Sorry.
We still got you here.
Yeah.
Any U.S. companies in the insurance sector you're keeping an eye on?
I keep an eye on MetLife.
Okay.
MetLife gives 2.7% yield and is trading at nine times. And because it's a life insurance, they will benefit immensely from an increase of interest rates, even though there will be a short moment in the portfolio. And the other one is Chubb. Chubb is an amazing company. They do extremely well, but nobody talks about them. One is 21 billion, the other one is 61 billion market cap. So those are, in my view at the moment, the two that I would personally consider to be very good investment, and that's what I'm watching.
Okay, and then just thoughts on the U.S. market, overall, the big tumble yesterday and, coming back today, kind of a trading range market. You expect that to persist, or are you one of those perma bulls on the market and thinks we're just going back up to new all-time high soon?
Well, that's interesting that you ask the question, because if indeed what happened yesterday is due to Greece, I would like to say one thing to everybody. There is a lot of politics around Greece, and the media love it. From a U.S. standpoint, Greece is tiny. So if that is what made the market drop, it's a great buying opportunity for the U.S. market.
Okay, all right. That's some great input. We have another sector that we can look at. We've been on the line with George Ugeux. He is from Galileo Advisors, joining us here on today's pre-market show. Thank you very much, and we hope to talk to you again soon. Great input.
Thanks, George.
Thank you. With pleasure.